let's use Ontario as an example.
Hmm.
Um, if it's their own personal vehicle, it'll be their insurance would be kind of considered to be the primary insurance in on an automobile accident scenario. But the risk comes for you as the producer because you hired them.
Hmm.
And all you need someone to do is say, okay, so this person had the accident. Ontario is a bit different. We have a no fault automobile system here. So, but you do get a right to sue somebody if you've substantially injured them, right? There's some thresholds, but the reality, let's assume we've got a bad accident, somebody's been injured, they have the right to sue that individual. The question is going to be, well, what were they doing at the time they were driving? Oh, they were working for this film production company. Okay, so let's tie them in, because let's face it, the more parties you bring into a claim, the better chance you've got of having some success. And so there, as a producer, as the employer, if you will, the
Hmm.
engager, all of a sudden you can find yourself in the claim. And what we do on our programs, and you'll see it on most insurance policies, is something called non-owned automobile liability. And that's actually designed to respond to those types of claims. When you find yourself brought in on a claim that's come as a result of a vehicle you don't own, which has either injured somebody or damaged somebody's property. So
Hmm.
your scenario right there would be covered by non-owned auto. It can also respond when you've got a rented vehicle. So your scenario of the Sprinter van, you've got, as the owner of that vehicle, they will have insurance on it, but you want to make sure that you've got this non-owned automobile liability insurance. But what they'll probably ask you to do in addition to the liability insurance is they'll want you to insure the physical damage of the vehicle. So
Right.
if it gets into an accident, damaged, needs repaired, needs replacement, they're going to want you to insure that. And again, that's something you can put under your production insurance
Yeah.
if you want. What I was saying earlier, though, is I always say to people, when you're into shorter term rentals, a couple of days here or there, it's always worth looking at whether you have an option with the agency that you're getting the vehicle from and insuring it with them. And the reason, the most compelling, we see all, we can have a production go flawlessly, but someone's going to drive into something, right? At
Yeah.
some point,
Oh
someone's
yeah.
going to back in, right?
I've been on one.
Yeah,
Yeah.
yeah.
We've all been
And
on one.
someone's rushing around, a PA's rushing around, something happens, boom,
Yeah.
they back into another car, or they back into a pillar, or they do something.
Yeah.
So what you'll find because of this on production insurance packages, the deductibles are relatively high. And so therefore, you could find, yourself with a $2,500 deductible. It could go all the way up to 10,000, because it's usually a bit of a sliding scale depending on how much damage has occurred. And, there's an unbudgeted amount. All of a sudden you're having to draw out of your budget to figure out how to pay the deductible. So sometimes, again, on a shorter period, it might be more economical to look and say, well, does Enterprise, does whoever it is that I'm renting my vehicles from, do they offer me an insurance option? How much will it cost me? And what's the deductible if
Hmm.
somebody damages a vehicle? On the longer term projects where we've got vehicles out for longer periods of time, and a lot of them, it's not economically feasible to generally insure through the agency. So we'll pick those up under the production policies.